Hello, it is Friday the 4th of April, the 4th of the 4th. Normally we would be excited about non-farm payroll and what that was going to mean for the economy going forward, but this has been a particularly wild week where there is so much other things that are more important to the economy and the world economy going on, that really kind of non-farm payrolls is a little bit of a non-event today. And actually I think that Powell speaking shortly after non-farm payrolls today is going to be much, much more important because of the anticipation and people starting to talk about an emergency rate cut. So we'll talk about that in a minute. What also is going on is we're seeing crypto trade pretty sideways and pretty resiliently in these really strong moves in stock indexes, particularly in US stock indexes. Normally a 5% down day in the NASDAQ would mean a 10 or 15% down day in Bitcoin. And that really hasn't happened. It's trading relatively resiliently and sideways in these moves. So let's talk about them and let's talk about where we are. I kind of feel like where we are is we were due a recession anyway. This is called the Buffett indicator. And this is market cap, in other words, the market cap of all stocks over GDP. And you can see it normally trades kind of sideways relative to GDP. This blue line is market cap to GDP. This green line is GDP. And this line here is the red line at the bottom is total assets of the Fed. We've really kind of never been this high in this indicator. We are effectively double, we were before the sell-off started, effectively double GDP for market cap. And they normally say once we get to 1.3 times GDP, you kind of want to be in bonds expecting a pullback, and that's basically what Buffett has been doing for some time. And my point here is although we have pulled back a little bit, we actually still have quite a lot further to fall in this indicator. And potentially we have started a move that has further to go. One of the things that I am watching for that is particularly for an emergency rate cut. Normally, I'm looking at the 2-year yield. So if we look at the US 2-year yields, let's bring this chart down here. You can see that as we head into the open today, we're trading at 3.5 and the Fed funds rate is at 4.25 to 4.5. So basically we're 70 basis points underneath where the Fed funds rate is. Normally stock markets don't bottom until the Fed funds rate is back below the 2-year yield. Now, in 2000, when we had the dot-com crash, and 2008, when we had the credit crunch, we actually fell a lot further before that happened, another 30 or 40%. And so I just want to say that all of these indicators, although this looks like a pretty interesting head and shoulders top in this yield chart, doesn't it? Basically what I'm trying to say is I don't think that this has bottomed yet, and for a lot of technical reasons I think this has further to fall. If we look, we have seen since these tariff threats and have started, we have seen, and the announcement of 50 billion in investment spending in Germany, we have seen a really big outperformance in Euro stocks, particularly, and that's turning up. I think that potentially that could continue, and that those zones and maybe Japan could be a bit more of a safe haven than US stocks in this shakeout. So let's talk about what that's going to mean for Bitcoin and where we are with Bitcoin. Let's tidy up my chart here. And this is what I mean about resilience. We are basically trading here on this weekly chart sideways, underneath the weekly 20 moving average and a little bit of a sideways range, holding above the weekly 50 moving average, which really basically, since we got above it back in March 2 years ago in 2023, has been pretty key support. I think if this breaks, then obviously we're going to fall further, but this is pretty resilient. So to me, that means if we're going to see a pretty good bounce in stocks, I think that we could see a pretty decent bounce in Bitcoin as well. But it's going to be all about the data today. Everyone's going to talk about that for about 5 minutes, and because right after the non-farm payrolls today, we have got a speech by Powell, and a lot of people are expecting an emergency rate cuts of 50 basis points or 75 basis points. So I think that that is going to be the most likely trigger for a bear market rally. And I call it a bear market rally because they can be really fierce, it's particularly in stock indexes and risk assets. They're designed to make you kind of feel that everything's okay again and we're going up again, and they can, a bear market rally is usually defined as at least a 5% rally, if not 10%, which we could see very easily in these stock indexes. But again, we are at the whim of the central bankers, and in this case, and what they do. The market at the moment is pricing in, has gone from pricing in a maybe rate cut in July to June, and now everyone is talking about a emergency rate cut if this sell-off continues potentially. So what would we want to see to buy Bitcoin for another trade swing higher here? Remember, I think from the low that in February, I think this is a big I think that we have made a 5-wave move, Laura, and this is an ABC correction. We could argue whether this is 3 waves or 5, but we are in a flat correction sideways from this February low. Here was our first swing, here's our second swing, and they usually have a mathematical relation. So the third swing is either 61.8 or equal to this first swing. And if I measure from this low to high, we paused at this 61.8 level, which is at 87,100. This for me is key resistance, and this is also where all our daily moving averages are bunched up. So if you buy this speculatively, that obviously is pretty key resistance, 87,100. And if we can hold above 87,100, our target becomes 93,500, which is where this swing and this swing are equal. If you're looking at in the futures, which are trading at a little bit of a premium to spot Bitcoin, it looks a little bit more bearish as we head into the open, but we could also argue here's our first swing, here's our 3-wave pullback, and if we do the same thing here, in other words, we measure this flat correction from the bottom of the February low here, low to high. This 50% level is also aware of is 87,260. Main resistance, this is here, 87,260, and above it, the upside equal measured move target comes in at 93,765. That little premium is disappearing pretty fast. Quite often, we have seen good moves in Bitcoin preceded by decent moves in MicroStrategy. So let's take a quick peek at this MicroStrategy chart and see where we are and if we are likely to. But I haven't got it here. Let's do it here instead. If we take a look at MicroStrategy and where we are, if we measure fib retrace, very similar to Bitcoin, we're stuck in between our weekly moving averages. We're held down by this weekly 20. It's a little bit spikier and more volatile in this. And if we we can hold above that 300 and that weekly 20 moving average, we're likely to see a kind of bigger measure move higher. But also this one is another one, just trading sideways, arguably, we could say that this was our 3-wave correction complete. Wasn't a double bottom, really nasty pullback. MicroStrategy is starting to not look quite so hot, but if this is a lower high and we're going to see another swing higher, clearly our major resistance is around 343 in this one if we can get above 300. So 300 is our main resistance, 305 is the 236 fib. And if we see another swing higher, 350, I would say, and back to is a pretty important pivot level through the middle in MicroStrategy, but as long as we stay underneath 305, we're just as likely, to be honest, to retest the lows, and I don't kind of really see a tradable setup. You know, US tech stocks, and by that I mean stuff that's made in China, like Apple, are a much better tech stock short than MicroStrategy at the moment. The other chart that I am pretty interested in is, should we be buying gold or Bitcoin as a hedge to everything that's going on? And if we look, I'm going to go all the way back and look at this chart that I had here. This is a chart of Bitcoin against gold. If we look at this, you know, we could argue that underneath these weekly moving averages and underneath the weekly 50, which gold is not doing which Bitcoin is not doing against the dollar, that means it has support, whereas this is underneath resistance. And I would argue from the low we made in 2022 in this chart, this is 5 waves up. The normal retrace would be back to the bottom of this wave 4 here and back towards this 200 moving average, which puts us at a 61.8 fib retrace at 21.25 and maybe 25 in the middle. So until this bottoms and starts turning up again, and I would expect this to have a go, at least to go down here at 21.25, I think that buying dips in gold actually is better than buying dips in Bitcoin at the moment. And so be patient with these setups, or just they're tradable bounces. We will get tradable bounces, but for quite a lot of stuff you kind of need to be picky. So I think buying tradable bounces in gold and Bitcoin is a good idea, but for a lot of stocks these have further to fall, so selling the bounces is going to be a better option. In 2008, I remember, in 2007, 2008, I remember thinking, gosh, this really can't keep going. You know, it would be like every day would come in, there was a bounce and you could sell it and make money. And I feel like this is just beginning in US stock indexes, and that is likely to continue. And all the technical kind of indicators say we have got further to fall in those. We are not quite at potential support levels yet. It doesn't mean we won't bounce, but we still have further before we bottom. So Bitcoin against gold, not quite a buy yet. I think gold outperforms. We have got potentially a little bit further to fall as we trade sideways in Bitcoin. And some of these other charts for altcoins are looking really bearish to me. So this is ETH US dollar. If we look at ETH on the dollar, again on the daily, you can see that we have these big fib levels are working pretty well. This 1,859 was a big 61.8 fib level, and now we are underneath it. It has become pretty interesting resistance. You can see this is where the potential support is. We've gone sideways at it, and now underneath it, you know, we're looking like we're making 3 wave rallies, which mean corrective, and we have got further to fall. If we continue to fall then in ETH against the dollar, then that 786 fib level is next, and that, I'm afraid, is all the way down here at 1,041. So this is not a place to be buying and holding. I think we have got further to fall, unfortunately, in ETH, and this is not good news for alts unless we recover this support and resistance level at 1,859 in ETH. This is an hourly chart. That's where our hourly 200 moving average is, which is pretty decent resistance today. So if we get a reversal today, and quite often, you know, when in a week like this, we've been pretty quiet in crypto, the kind of volatile moves tend to happen at the weekend. If we are going to be going higher here in ETH, and if we look at it on a daily chart, the level that we need to recover and hold above for a swing trade with something to buy against is 1,859. And whilst we stay underneath that, I have to say this is a sell. And I think we've got 1,041 on the downside as the next target in ETH. And I know that's not very good news, but it's not, unfortunately, looking very enticing. Solana's in a little bit of a better position, and I'll tell you why. If we look at this on the weekly, these fib levels, have been pretty interesting support on pullbacks, and this 61.8 level worked really well as support. And we said if we got above the 50% level in the middle, our next upside target was at 182. So we bounced pretty nicely as expected at 112. Got reversed at 147.50, the first target, and now here we are back testing this level. If we look left in Solana, you can see that it's a really important level all the way back to 2023. It was the highs here, it was the highs in February 24, and it was the lows and support in August 2024. So it's a big deal level at 112, 112.69, and here we are back testing it. If we are going to see another leg higher and we're going to do one of those golden ratio zone reversals, I would expect a double bottom bounce here and back to the top of the range, first target at 147.50, and if we get above it then 182. But if this breaks today at 112.69, and as you can see so far on the hourly, it's been really good support on a retest. But if we were to get underneath this level in a nasty shakeout, then we are likely, unfortunately, to continue low. And by that I mean get underneath it, and then at that level becomes resistance. That's your sell at 112.69. And if it turns into a nasty shakeout, we might not even bounce that high. It kind of might be a higher low, and then we just keep going. So Solana, pretty interesting support. I still think that this holds on a retest, and we at least go back to the top of this sideways range at 147.50, and if we get a decent bear market squeeze rally, 182, and that's where I would be a seller in Solana. So potentially we have got higher to go in some meme coins, and not everything looks, I have to say, not everything looks terrible. I thought PEPE was looking pretty good for a bounce. NonPlayableCoin is a pretty interesting chart as well in the little meme coin space. In anything, this is a daily chart, and I look at moving averages, right? And so when you're in a downtrend, your moving averages tend to hold you down and be resistance. And when you get above them, you look for them to be support. In this case, I'm looking for a counter trend rally, which means I'm looking for us to find support from these moving averages and return to the daily 200 moving average. That would be my target if we make a lower high. We're going sideways at the moment. To be honest, we could just as easily do a double bottom like Solana has just done before that even happens. So I haven't quite got the buy trigger I'm looking for it yet. I've got my Heiken-Ashi on. Looking at a low time frame, I'd like to see us back above this high in the middle and above these 4-hour moving averages, but I am looking for a higher low and another swing higher. If we take a look at some of the ones that have really been outperforming, PEPE is pretty similar. Yeah, let's look at this. For me, this was a pretty important support level, so I'm looking for 3 waves back and this to turn higher again. But for PEPE, I think I'm going to wait and see if we can hold above this daily 50 moving average. And then the counter trend target, first target, would be a retest of these highs here at 1,077. And if we can break above that, as I said before, the target up here, second target is 1754, just based on fib patterns. So, not everything is making lower lows like Bitcoin. It's going sideways. We just haven't quite got any buy triggers at the moment. And if Bitcoin is going and crypto is going sideways and more resilient, it's not the best short either. It's kind of better to sit and wait for a better setup. I think there is a risk if these markets continue lower without a bounce that they will just drag everything in crypto down with it. But that if we get a bear market rally, some of these crypto assets might be really interesting for bounce trades. Let's take a look at a couple more. One thing that got really hit this week was news that Doge would not be, Elon would not use Doge for the Department of Government Efficiency, and Dogecoin is kind of sideways again. If we look at this, 4 weeks of really trading at exactly the same price. there's not much going on. There really isn't a trade at the moment. But if you wanted to buy dips against this, you can see that this weekly 200 moving average has been pretty interesting support. So if we were to get a kind of double bottom or something like that, I don't think it's a terrible idea. We're just not quite there yet, unfortunately. TRX was another one that's been, Tron has been really outperforming. If we look at it on a weekly, here we are in a pretty interesting sideways wedge, another one that's made a higher low and is holding the support of the weekly 20 moving average, which has been support in this uptrend, let's face it, all the way back, well, again, 2 years, all the way back to 2023. It's seen a really nice pullback here. And so this is another one, pretty resilient. The problem with these wedges is sometimes they can be 5 waves and we stay in the top of this range, but this is another one where I think that it is definitely outperforming and not a terrible idea if we get a bear market rally. This is definitely on my list, so one that I'm looking at as well. Okay, sorry that I really don't have any kind of better, whilst we're trading sideways while the world is going to hell, it's really quite hard to see inspiring crypto assets, but or trade ideas. But I think that a lot will depend on what the Fed does next and an emergency rate cut. And so Powell's speech today is probably going to be the most important thing that's going to happen. And that happens at 4:25 p.m. UK time, which is 11:25 a.m. New York time.